Well, let's talk about NVIDIA. Reports earnings today, but we've got to go through some of the big competitive advantages for NVIDIA even beyond earnings. We'll talk a little bit about earnings expectations and some of the things to look for in the finances, but most importantly, we want to talk about what makes NVIDIA an interesting, potentially unique investment opportunity in the long term. What are some of its advantages? So outside of the short-term news, what's the long-term thesis for investing in NVIDIA? And what do those finances look like? Well, let's start just there. So when we actually look at the finances, we can see that NVIDIA, much like most of the chip companies, are quite frankly in a bit of an earnings, recession. This is the latest NVIDIA report for the year. This is their latest annual report for the year ended January 2023. So in other words, the full year of basically 2022, Jan to Jan. You can see that revenue was flat. While revenue was flat, their cost of sales, so their cost of goods sold, their products, cost them 23% more. So their income was flat, but 23% more cost for the actual products. Their research and development up 39%, sales and general and administrative SG&A up 12.6%, leading to a net income decline of 44.7%. That is a negative 44.7% decline in net income. This is an example of your earnings recession. Now, it could be argued that, hey, look, the company exploded. And the fact that you have flat revenue is actually fantastic, because think about it. You went from 16.6 billions in January of 2021 to 26.9 billions of revies right after that. Which is freaking awesome, because if you look at that, it's like, hey, wait a minute, Kevin, that is a 62% increase. And the fact that we're flat off of that, not bad. It's literally like growing like this, then having this exponential explosion, and then being flat. I wish it didn't correct, because I liked my drawing better. It's kind of like growing like that, and then having this explosion of exponential, and then flattening. At least it didn't plummet back down to where it was just sort of a little triangle there, right? So this is actually pretty powerful. Even though costs are going up, the revenues are flat, and the net income is like down 44%, you've left the stimulus era, right? So of course, you've got these really negative comps. And these negative comps have led a lot of these manufacturing companies, or sorry, not manufacturing companies, these chip designing companies like NVIDIA, AMD, right? They all pretty much use TSMC to manufacture. Maybe Intel will come in the race in the future, though they've got some work to do. They actually think that Intel could be a big player in the 1.5 to 2 nanometer chip space. We're not quite there yet. Right now, we're working in the 3 to 5 nanometer chipset space. And that's the spacing of transistors and chips. The smaller, in theory, the more efficient and the better these chips could be, the stronger and more powerful. That's all down the road. Intel could be a game changer in manufacturing probably in 2024, 25, 26. Although they could also be a value trap and end up going bankrupt. But that's really a topic for a different video. We talk about Intel a lot in the course member streams, mostly because that thing's trading for a PEG ratio of like 0.5. Now, before I lose you on PEG ratio, remember what a PEG ratio is. It's how much you're paying for growth at a company. And one of the things that I like is I like looking at companies usually around a 1.5 to 1.69, 1.7 PEG ratio. That's about where Tesla is trading now. It's about where Enphase is trading now. Etsy is trading below that right now. The problem with something like NVIDIA is it's trading for a little bit above that range. Right now at $306 per share, $306. This is your share price, and you'll see how to calculate PEG as well. Right now, we're looking at a full year of 2023, so first quarter earnings aside, full year of 2023, which is their fiscal 24, we are looking at earnings of about $4.60 projected. We'll get some guidance on that, but it'll probably be somewhere close to that. 306 divided by $4.60 puts you at a PE ratio, a forward PE ratio, so we say FPE, a forward PE ratio of 66.5. That's a little bit rich. Now, the company in terms of growth is expected for 25, 6, 7, and 28 altogether to average about 25% growth. Well, if we divide by 25% growth, so in other words, that PE by 25%, removing the percent is what you do for this math, divide 66.5 by 25, you get a PEG ratio of about 2.66. Unfortunately, just on a simplified valuation measure, that's quite a bit above where we probably ought to be, if closer to 1.6, 1.7. It's about 66% above that. That's quite a bit stretched right now. Now, maybe NVIDIA's earnings will explode more, and that's possible. That's the hope, is that NVIDIA's earnings will explode more because of, well, the whole reason people are investing in NVIDIA right now. And it's obviously artificial intelligence. Everyone's investing in NVIDIA right now because it's seen as the best play for artificial intelligence going forward. And that might be the case because, quite frankly, when it comes to dedicated GPUs, graphic processing units, which are going to be the strongest and most powerful for providing data and services for, well, artificial intelligence, NVIDIA takes about 80 to 88% of the market share. That's really, really powerful. So when you have NVIDIA taking 80 to 80% of that market share, you kind of look and go, well, if you're going to want to invest in AI, maybe, just maybe, investing in NVIDIA is the place to do it. The problem is, AI has really been hype trained up before we've actually started to confirm where AI revenues are going to come from. This is something that I always caution, and it is this idea of, okay, well, look, AI we know is going to be great. I think all of us agree that it's going to add productivity to us as individuals. If you're not becoming more productive because of artificial intelligence, you're probably going to end up getting left behind. You don't want to get left behind because if you get left behind, you're more likely to lose your job. You're less likely to get a promotion. You're less likely to essentially get ahead in life. So you want to incorporate AI in your life, and we want to invest in AI-related plays. This is why I have a program on building your wealth. So we've got programs on investing, stocks, and real estate. We do fundamental analysis on stocks. We'll do some fundamental analysis on NVIDIA here as well, and we'll do some earnings expectations. But also, we have a course on building your income, how to make more money and get SH19 done faster, featuring AI, the AI segment, and how to actually incorporate AI in your life comes out June 1st. So check that out before the pricing goes up after that content drops. But what do we know about NVIDIA? Well, we know a lot. We know that NVIDIA is using TSMC to manufacture a lot of their chips, and they sell their GPUs to the software companies and server companies that use them for artificial intelligence. Think Microsoft, AWS, Google Cloud, all of them, when they use AI, most of the AI technology and processing and the compute power is being put through NVIDIA GPUs. Now, Google does have these TPUs, which we don't want to go into this super detail of what all these different processing units are. In that case, that's a tensor processing unit. And Amazon's also making its own server-based chipsets. But when it comes to actually processing artificial intelligence, NVIDIA has, like I said, 80% of the lead. Now, there are two different types of graphics units. There's sort of your integrated graphics chips, in which case NVIDIA actually has a very small market share of them. This is sort of for your regular consumer products, whether it's a laptop or whatever. But when it comes to dedicated graphic processing, which used to be Ethereum mining, for example, with GPUs, which no longer is, that's led their gaming revenue to absolutely tank. That's contributed to their earnings recession. That's gone now, right? But when we have dedicated uses for artificial intelligence, what are we looking for? We're looking for dedicated use chips, and NVIDIA is the 80 to 88% market share of this. And again, they're using TSMC to manufacture, but TSMC has also got a little bit of an up there valuation, probably also trading for somewhere right around a 3 peg. But people see NVIDIA as the really shovels of the gold mining race in artificial intelligence. And the reason people call it sort of a picks and shovels play is, again, we don't know which software companies are going to win when it comes to AI. We think that, oh, Google's going to win or OpenAI is going to win or all of these, maybe Microsoft will win because of their investments into, OpenAI or, Google's Bard will win. But the problem with this is we don't know yet which software is going to win. In my opinion, the best software is where people are going to flock to. As soon as there's a better chatbot, everybody goes over to that chatbot and dumps Bard and OpenAI behind. That's a big problem, especially since when you look at a company like Google in terms of an investment, you're looking at advertising revenue and network placements on websites representing 69% of the company's income. Well, if that income starts bleeding down because you need to search less, sure, AI will contribute to some sort of income at Google. How do we know how much income that's going to contribute? What I worry about is that AI will contribute revenue like this for Google, while their ad revenue goes down. So you'll see an increase of AI revenue here for Google, but you'll see search and advertising revenue decline, and you potentially have this massive loss as potentially some of these ads go to other AI platforms. We just don't have that certainty yet, but we do know that NVIDIA is probably your AI processing play. And that's exciting. This is one of the reasons NVIDIA has blown up so much recently. One of the things to know as well is that a lot of people use the NVIDIA architecture for actually building applications or programming on it. I'm not a programmer, but a lot of people use the software stack that NVIDIA uses to extract the power out of GPUs. The Cuda system is amazing for doing exactly this, and a lot of people prefer it. And when they prefer this for their server infrastructure, they have to use NVIDIA chips. AMD is not even close yet in terms of these AI processing chips that NVIDIA has. And they're just now, way after NVIDIA have they gotten into creating their own software stacks to try to compete with what NVIDIA has. So NVIDIA has some massive advantages. Now, what's also exciting, a lot of Cuda, by the way, creates a massive moat for NVIDIA. So when you're investing in NVIDIA, you're not just creating it, or not just investing in this chip designer, you're also investing in their software and the moat that they have because of their software, whether it's the Omniverse or Cuda or otherwise. Now, it's worth noting that if you look at the top about 111 actual graphics units listed on Benchmark UL, what's remarkable is the first 111 chips basically show you a duopoly. You have AMD and NVIDIA. That's it when it comes to graphic units. But when it comes to AI ones for those servers, NVIDIA is the winner. It's not until the 112th chip that you actually get to an Intel graphic processing unit, which is pretty remarkable. Now, one of the downsides that you're seeing right now is unfortunately, NVIDIA has this huge backlog of inventory of GPUs because of the lack of use from Ethereum mining, and also everybody's already bought their new gaming PC during COVID. So you have this massive PC crush, you've got a massive inventory glut. And so you actually have some risk factors for NVIDIA in the short term that potentially inventory gluts are going to reduce pricing power at companies like NVIDIA. You're going to see reduced margins, and you're going to see reduced revenues before you actually see the AI revenues come through. Just because AI started becoming really exciting in the last 2 months doesn't mean all of a sudden every company under the sun is buying more NVIDIA chips. It could take years to really see AI play out at NVIDIA. So I think NVIDIA is really this play that you have to look at from a long-term point of view rather than something that you want to play short-term. I actually would be short-term bearish on NVIDIA trying to play earnings, mostly because we don't know. Maybe that's already built into the expectations. That's always the funny thing with earnings. When you look at earnings, you're looking at an implied one-day volatility movement of 4.7%. So 4.7% stock movement after this earnings doesn't seem that big. NVIDIA's EPS has beat 4 out of 8 times, so it's a total coin toss. Although their revenue has beat 7 out of 8 of the last times, so there's a good chance they'll beat on the top line again, but potentially again miss on the bottom line. So we'll see, but we know NVIDIA's had one heck of a run up recently because of AI, and I don't think AI is going to be contributing to a big portion of their revenue anytime soon, even though we do know, and maybe their forecast and their guide will help, because if they give a really rosy full year guide, maybe that'll help boost the stock. But I really think it's going to be a minute before we see some of this revenue actually push through. NVIDIA doesn't really do 5G. We know this is more of a Qualcomm play, but some people have been asking about that. You've got competition coming for manufacturing, but that could actually contribute to NVIDIA. The more companies like Intel or Applied Materials or whatever, Micron in America that might end up manufacturing under the CHIPS Act, those companies will benefit from the stimulus checks the governments are handing out for manufacturing chips in the United States. This is good, and that could be good for potentially reducing some of the costs of NVIDIA actually having to manufacture chips, because remember, NVIDIA doesn't manufacture, they design and create software, and then they outsource the manufacturing. This is very typical. Only Intel really does both. They both design and manufacture. But even like a Tesla, they might design their own chips, but have somebody else manufacture them. So there is some excitement about this manufacturing coming to America, this sort of reshoring. Some worry that this is going to be inflationary and actually increase the cost of chips. And even the CEO of NVIDIA just today on the Financial Times argued that we have to be careful about more of these restrictions against China and sort of limiting China's exports, mostly because they could end up hurting NVIDIA's ability to actually sell this massive backlog of chips that they have. So there are some short-term concerns as well with the United States potentially being too aggressive against China, and how more of these chip bans could potentially actually encourage China to manufacture their own proprietary chips at the downside, or to the downside of NVIDIA. But just today in the Financial Times, you have the CEO of NVIDIA warning about enormous damage from the escalating battle over chips between Washington and Beijing, suggesting that you're tying Silicon Valley's hands behind their backs if China can't buy from the United States and they just end up building their own chips. So big warning there from Jensen, your CEO. Of course, China, before all of these sanctions, or as many of these sanctions, China represented somewhere around 24% of NVIDIA's order book. So big chunk of it. I actually like investing in companies that have exposure to China generally, because I don't have to invest in Chinese companies to get Chinese growth. I can invest in American companies to get that growth. I like that. You did just also have an announcement between Apple and Broadcom, but that's more of a middle finger to Qualcomm than it is to NVIDIA. Intel dominates the CPU market, and maybe the integrated GPU market contributes to this. But really, NVIDIA, when it comes to dedicated chips, and AI chips, they're almost the only game in town. On top of that, they're paying somewhere around 1.9% in taxes because they run a lot of their revenue through subsidiaries, whether it's in the Cayman Islands, the Netherlands, or other countries in Europe. This has led a lot of people to be very frustrated over some of the tax credits and opportunities that they're able to do to avoid or take advantage of to avoid taxes. And a lot of people slam NVIDIA for this. NVIDIA sees this as just smart taxation, running some of their revenue even through Israel or Hong Kong. And they suggest this allows them to spend more money on R&D, which NVIDIA will also benefit from the CHIPS Act and R&D spending, which is great. Remember, this is stimulus money. It's basically free stimulus money, which is very exciting. I mean, these companies will benefit tremendously from investments directly from the government and money printing. So if you like investing where stimulus money is going, chips, manufacturing and chips. You have to be careful though, because if you search like top chip companies in America, you might get search results like Frito-Lay or Lay's or whatever. It's a problem. So you have to be careful. But anyway, I just want to make sure we're doubling down on how important Cuda is, because a lot of current AI systems are actually trained on this coding infrastructure of Cuda. It is a massive moat for NVIDIA. It has been in development for 16 years. It's their proprietary software stack. And it lets you extract that power from the NVIDIA GPUs. So if you want to run processing through the GPUs rather than just the CPUs, you have to use Cuda. And Cuda is it's robust. It's great. It's a fantastic software. And so the competition just doesn't hold a candle to this. And so people like manufacture or basically coding with this compared to AMD's Rock M, which is, you know, sort of your closest second, but it's still a big second. It's probably, some people say it's 9 years behind Cuda. It probably isn't 9 full years behind. It's probably more like 2 or 3 years behind, but it came 9 years later. So it's also worth noting that NVIDIA has transitioned from gaming to data centers. And this has been critically important because gaming has just absolutely gotten destroyed post-COVID because, again, everybody's already got their they've already got their new gaming PC, and gaming has been substantially less of a level of importance for NVIDIA's revenue. AMD's catching up on gaming as well, so maybe less of an area to really grow. But really what's important to know is that right now the market is already pricing in about 25% growth for NVIDIA, and that's at a PEG ratio of 2.6, I think we said. 2.66. You're already paying a premium for that 25% growth. I think 306 is a high level. I'm not saying that NVIDIA deserves to go down. I wouldn't short this stock just because it's such a blindly easy pick for institutions to go, oh, we need AI exposure. Just buy NVIDIA. Like a drunken sailor could go, NVIDIA for artificial intelligence. That doesn't mean it's going to outperform other stocks, though, in the near term. So while I have exposure to NVIDIA, I'm not very excited about having a super high allocation to NVIDIA right now. Would I consider trimming before earnings? Potentially. Am I going to? I have no idea. I don't generally like playing earnings. I think it's very risky to do that. But I do think there's a lot of enthusiasm that's coming before the actual steak, right? Like the analogy of selling the sizzle before the steak. Yay, AI boom. Okay, where are the AI revenues? They'll be here in a few years. Like, they will come, but it's going to take a little minute. And at this PEG ratio, I think there are better deals to buy. I mean, you know, we just had a report from Goldman Sachs that online retail is starting to explode again in April based on retail sales reports from April. And you're looking at Etsy trading at about a 1.3 times PEG. So it makes you wonder, okay, do you want to get into that kind of consumer discretionary? If you want AI, Tesla's much cheaper than NVIDIA right now at, you know, somewhere around a 1.6 to 1.8 PEG. You have to be careful when you do these calculations as well, not to use 2022 numbers. You have to go current year out. So 9 to 16, 18 months out is generally what I do with evaluations, because you're getting away from some of the whole of the earnings recession that you saw in 2022. So do keep in mind for expectations, we're looking at 92 cents of adjusted EPS. GAAP EPS, we're looking at 61 cents. Revenue expectation, we're looking at $6.52 billion. Net income, $2.27 billion expected. Data center revenue is expected to jump nicely, so hopefully that stays that way. Again, if you run some DCFs on these, you're really looking at growth already priced in. At least 25% is already priced in. Some are arguing, depending on how you run your DCF, that you could be sitting around 30% already priced in, 35% priced in. So a lot of richness already priced in. We'll leave it at that. But again, you know, they're going to have a great growth story over the next decade. And it's possible that the growth that's been forecast before this AI boom hasn't yet really been updated to reflect how much growth is truly going to come from AI. Though I will say I think AI is going to be a big part of what we hear about in the earnings call today. So that'll be fascinating. And so I'm super excited to see what happens here. At the same time, again, AMD is really focused on gaming. And yes, they're going to focus on, to some extent, servers and AI for enterprise. The right focus, in my opinion, is on AI and these server chips. And I think NVIDIA is just playing the game correctly here. They've got the edge with Cuda. They've got the moat with Cuda. And they're dominant in the market. So there's little you could say about how NVIDIA is not going to be a massive beneficiary of AI. They almost certainly will be a massive beneficiary of AI. But the valuation today, hey, let's just say, you know, I hope they crash over the next few earnings cycles, so you could pick up Nvidia cheaper maybe when the AI hype cycle dies down a little bit. Am I jumping up and down about buying it at 306? Hey, who knows? You know, maybe they give rosy guidance and they're up 10% and you're like, should have bought, you know, but the valuation is rich, and usually the market does a good job of eventually leveling out those rich valuations. So if I had to say what would be a little bit more of a fair price right now for Nvidia, I'd probably say you'd want to be closer to, I mean, people are going to get mad at me saying it, but probably 200 to 250 would be more reasonable. If you were under 200 like we were for a while when I initiated my position in it around 150, well, then it was just juicy. But duh, I mean, it's doubled since then. So anyway, remember, if you want all of my buy and sell alerts, join the Stocks and Psychology of Money group, link down below. If you want to join me on the AI drop, make sure you join before June 1st for the How to Make More Money and Get SH9T Done Faster course members. Who are already part of the income course or getting that sector for free. And you could lock in your price as well before we increase the price again when the content actually comes out on June 1st. The other content's already in there, but the AI content's coming out on June 1st. So with that said, very excited about NVIDIA. Long-term, short-term, bearish. It doesn't mean I'm going to dump all of my NVIDIA exposure beforehand, though. But who knows? Maybe a little trim is in store. But yeah, anyway, that gives you some insight on NVIDIA. Hopefully it's useful for you even beyond this next earnings set that comes out. And yeah, I wouldn't bet against them long term, for sure. Just like you shouldn't bet against those courses on building your wealth, link down below. See you later. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced. A quick follow-up on NVIDIA. Some people want me to look at the balance sheet and the cash flow statement. Fine, I'll do that, okay? Here's the quick skinny on it. They've got about $13.2 billion of cash and marketable securities. They've got short-term liabilities in the Kevin math. I do Kevin math a certain way of about 5 billies and maybe about 11.6 in long-term debt. Free cash flow, you're sitting at about 3.8 billion, so you've got free cash flow, so the debts don't terribly much matter here. They've got plenty of operating room. Actually, pretty good financials.